The Disney company has found themselves in quite a bit of turmoil over the past few years, and one of the more famous incidents was the board battle with Nelson Peltz and Bob Iger, where Nelson Peltz did lose his bid to get two board seats there, and we saw the stock price go up quite a bit as Bob Iger had made some announcements about some things coming, some a stake in Epic Games, among other things. And since then, though, and Bob Iger got his way, the stock price has come back down under $100, which definitely is not a great sign. And Forbes here has an article talking about this. And I thought it was a good idea to take a look at this, go through the article, and then get some thoughts on it. So that's what we're going to do today. So, hi, I'm Jared with Capture the Magic, and we'll get right into this. Now, one thing I did want to point out before we even get to this article, that the Disney stock price is not because the market is down necessarily. So this can happen a lot of times, and this is not financial advice, but I have done some investing in trading, so I do understand the market, at least fundamentals of the market. But again, this is not financial advice. This is just me talking. I'm a nobody here, so don't listen to what I'm saying. So, what if you're not familiar what SPY is? SPY is a passively managed fund by State Street that basically mimics a performance of the S&P 500. So it's like a metric of the stock market, if you will. Disney is obviously a part of the stock market. So like it, that's where you see. So, and the blue line here is the Disney stock, and the yellow line here is SPY. And we can see here around, for the longest time, Disney was going up quite a bit. SPY has been kind of steady, dipped a little bit. But since about sometime in May, it crossed, and Disney has been underperforming compared to SPY. So the recent stock performance of Disney is not because the stock market has been down, which can be the case sometimes. Sometimes you'll see articles that'll say, so-and-so stock prices plummeted. And if you take a look at it, like the stock market had a bad day and all stocks that day basically plummeted. So it's not one of those situations where the market as a whole is just down and Disney's been dragged down because of it. Disney is underperforming the market currently. But this article here from Forbes says it's no surprise Disney's stock price crashed below $100, and here's why. So I figured let's go into this. So Disney's stock should be on a roll right now. Last month, the company signed a deal with the local government in Orlando, paving the way for it to build a fifth theme park at Walt Disney World as part of a $60 billion investment plan. That wording, okay. In other videos, I've talked about this. I don't believe Disney's building a fifth theme park. I don't believe it's happening for probably a decade or more. I think they need to do more stuff in the parks, but in it did pave the way where they could. But I don't want to put it out there that they're going to do that or announce that at D23 this year. I don't think that's the case. I guess they always could, but I don't believe that's any announcement you're going to hear at D23 or anytime soon. Instead of having a magic touch on its share price, the stock fell below $100 a share for the first time since February, and there is a good reason for this. Theme parks are the engine behind Disney's profits. This is very true, and a lot of people don't quite understand how much the parks basically bankroll the rest of the company. Its 6 resorts are grouped under its experiences division, which accounted for most of its $12.9 billion operating income last year. It was far from a flash in the pan, as Disney's latest results show that over the last 3 months, to the end of March this year, Experiences generated $2.3 billion of operating income, which is almost 3 times more than the amount made by either of its other divisions, sports and entertainment. The Experiences' success stands in stark contrast to the Disney Plus streaming platform, which has burned up more than $11 billion of operating losses since 2019, and it's forecast to make a profit and isn't forecasted to make a profit until the end of this year. Disney Plus has been dragging the entire company down. There was one quarter they almost lost $1 billion, and here, like, even if they're profitable in one quarter, they're still down basically $11 billion on it. So that is a major part of it as well. In an attempt to capitalize on the success of its theme parks, Disney announced in September 2023 that it would invest $60 billion in its experiences division over the next decade. It was widely reported that this would all be directed at theme parks, but close reading of the filings reveals that the parks will only get half of the total, with the difference spent on Disney's cruise line as well as maintenance and technology upgrades. That's something a lot of people don't know about, and it's not talked about. And Bob Iger and Josh Dimar have gone on and on about how they've got $60 billion they're looking to invest, and I think they definitely held that number over the head when it came to the things they were trying to do and dealing with the state of Florida. And now that is behind them, they're still talking about this, but again, a lot of that is for cruise line and maintenance and technology upgrades, which I'm not saying Disney World and the theme parks don't need maintenance upgrades. I think they need a lot of them, but it's not. I think people get this wrong idea when they say $60 billion, as if Disney is going to announce $60 billion worth of new lands, rides, parks, and things like that. Nevertheless, the $30 billion investment in its theme parks is still around 60 times the sum spent on Disneyland Paris last year, so it is far from a Mickey Mouse amount. True. Seemingly against expectations, it casts a dark spell on Disney's stock price. It says Disney stock down and it wasn't a one off. When the investment was announced on September 19th last year, Disney's stock closed down 3.6% at $81.94. It was one of the worst performers in the blue chip Dow, and it was not a one off. In the middle of June, Disney revealed where the bulk of the spending would be going when it signed a new development agreement with the board of the Central Florida Tourism Oversight District. It is Disney's answer to the heavy expansion in Orlando by its arch rival, Universal Studios. Universal already owns 2 theme parks in Orlando and is building a third one, Epic Universe. We know that. Reported to cost at least $1 billion. The 750-acre site will be Universal's biggest single ever investment in theme parks. By the way, I just want you to think about the fact they are building Epic Universe, and it is reported only costing them $1 billion. I believe that Galaxy's Edge cost $1 billion or close, maybe $700 million alone, just on one land. So that alone is pretty impressive. The doors of Epic Universe haven't swung open yet, but Universal has already got the green light to expand it on June 7th. And we did a video talking about this, that they expanded the potential development area to 2,000 acres. Despite this, when Disney's $17 billion investment was announced on June 12th, its stock closed 0.1% down to $100.80. 2 days later, it dipped below 100 for the first time in 4 months. On the face of it, it may be hard to understand why Disney's investment in its most profitable division has not been met with more approval from stockholders. However, on closer inspection, it soon becomes clear why it's not necessarily a dream ticket. Okay, here's the part we really want to get to here. Developing top flight theme park attractions isn't for the faint-hearted. It is common for construction crews to encompass hundreds of workers and for costs to come to more than $100 million. Much more than that usually. It isn't for the sake of it. The top theme parks generate billions of dollars of revenue every year and have fat margins from merchandise, food, and beverage sales, giving them even enough cash flow to fuel the development of new attractions. However, justifying it is far from child's play, as entry tickets generally give guests access to all the attractions, so it isn't possible to attribute a revenue stream to specific ones. It perhaps explains why Disney is increasingly introducing queue-cutting passes, which used to be free but now come at a cost to guests. This gives specific rides a revenue stream, which enables the park operators' accountants to forecast how much money they will generate and therefore make it easier to justify investment in them. You know, that is something people don't talk about and is very true with doing things. What was Genie Plus now is going to be Lightning Lane. It does attribute a revenue stream, especially when you're talking about the individual Lightning Lanes, to specific rides. And that is something I know on the accounting side, I'm sure they love, but it also gives them an idea of how much money based on demand of, previously high in demand rides, of what they could look at making off of them. So that is a very valid point that not a lot of people talk about. Okay, so Disney's next steps. Disney parks are far and away the leaders in terms of attendance in every market and operate according to the Global Attractions Attendance Report. Accordingly, investors in Disney might quite rightly question whether new attractions are necessary to attract more guests when the park's already in the lead. I think Iger and them have taken this approach, and I don't think this is an approach that is paying off for them, because we've talked about many times, I think Epic Universe is about to change all of this. Now, I'm not saying they're going to overtake Disney, but I believe that it's going to force Disney to do quite a bit of things in the future here. Disney can't afford to be complacent, especially in the face of aggressive expansion by Universal. However, staying in the lead isn't as simple as opening its wallet, as the investment is so large and it is spent on assets that have a low to no revenue stream. It says it raises the stakes for theme park attractions, and for Disney in particular, as the success rate of its recent theme parks additions is choppy, to say the least. Ouch. Which I would agree with. As recently reported, Disney came under fire from fans for retheming its classic log flume at the Magic Kingdom to reference the 2009 movie The Princess and the Frog. Likewise, in April last year, scathing reviews led to the parks to replace its Disney Enchantment fireworks display with its popular predecessor, Happily Ever After, just 18 months after it was introduced. In the same year, Disney's neighboring Epcot Park dropped its new show, Harmonious, after excoriating feedback from fans. The disenchantment from fans is a black mark on the resume of Josh D'Amaro, chairman of Disney Experiences. Famous for his sparkling, toothy grin. Man, they are going at him. Diamaro is a regular visitor to the parks and often stops for selfies with guests and staff who are known as cast members for the first roles they play in the themed environment. Diamaro himself has 151,000 followers on Instagram, where he posts pictures of himself inside the parks, riding roller coasters, brandishing lightsabers, and eating soft serve ice cream. Opening new parks and attractions add to his resume, but the question investors may wonder is whether they are necessary. Josh Diamaro's catching strays. I don't know if it's strays. I mean, he does lead the park, so they also go on here to talk about how Disney does what they call plussing attractions versus building brand new ones. And plussing rides in some updates, it says, are successful as they are exported to other parks. In 2016, Epcot gave its log flume makeover themed to the hit animated movie Frozen, and it was so successful that a clone of it opened in Hong Kong. So basically, what they did with Splash Mountain, turn it into Tiana's. They just take rides that are one thing, they basically theme them over, and that's what they call plussing on the park side. But they're saying plussing attractions is a more cost-effective way of putting investment to use than building new ones or new parks, which explains investors' concerns. However, even plussing comes with a risk, as shown by the Magic Kingdom's Princess and the Frog ride experiment. Theme park attractions typically have an expected lifespan of several decades, so even a weak one should eventually pay off by contributing to attendance gains, but few investors will be prepared to wait that long to reap the benefits. I agree. Well, and I don't think you retheming attractions I think that worked maybe before, but now you have Universal being so aggressive and building a brand new theme park with all brand new attractions. I don't think just retheming some rides here and there is going to be enough to really combat that going forward. I think it worked in the past a little bit more, but I don't think that's just going to cut it going forward. A quicker and cheaper solution could be reducing ticket prices or reinstating the free perks. I have a feeling that will never happen. In February, Disney raised its ticket prices again, following an increase of up to 10% last year. The least expensive tickets have surged by 9.1% to $119, while the cost of visiting the Magic Kingdom on busy days, such as July 4th, rose from $184 to $189, which now puts them at more than double their price in 2011. Yeah. I mean, agreed. I mean, if they really want to get people in the park, that's one way they could do it. But they'll run ticket deals, but they're not going to actually lower those ticket prices. Prices of food favorites at Disney World have risen even more, according to a recent report by financial advice website Finance Buzz. It found that they have gone up 61% on average over the past decade, compared to a 56% rise in the cost of a single park ticket and 32% increase in inflation over that time. So basically, inflation's been 32%, and Disney has been double that when it comes to food and merchandise, it seems. This really goes on to like a lot of theme park fans have been getting mad about this, which is very true. Then it goes on to say, earlier this week, Disney changed the name of the queue cutting packages, but didn't cut their price. Fans saw through it with the Disney. It says fans saw through it with the most of the negative comments are about it being it used to be free, and I get it. In reality, though, it's never going to be free again. I get that, and I said that as much on another video. I mean, I would love for Fast Pass Plus to come back. I think that would be a thing that would bring people back to the parks quite a bit. It would make the fans happy, but they're just not going to do it. It makes too much money for the parks now. I mean, and it goes on to say here, waiving the fee for queue cutting would remove a lucrative revenue stream, which helps to justify the construction of new rides, but it would also boost visitor numbers and thereby merchandise, food, and beverage sales. That's probably the big question. If you were give people what they want, Fast Pass Plus back, you make it a little bit cheaper here and there, you might actually make more money. I think there's something to that. Now, I don't think Disney and its current leadership will do that, but it's interesting that Forbes is pointing this out here. I just want you to know this is coming from Forbes. This is not like some random blog. This is a major publication talking about this. It is a very, very tricky balancing act between raising prices and balancing a good, strong, healthy, robust demand, said Bloomberg senior media analyst Getha Rangnathan in May. What is really spooking investors today is Disney's commentary on the parks business. They did say that they are seeing this moderation in demand, and for the fiscal third quarter, their guidance was really, really choppy. They basically said they expect absolutely no growth in theme park operating income. It comes at just the wrong time. They go on to talk about Disney's movie and streaming woes aren't helping either. I mean, Inside Out 2 was just recently a success, but before that, the movies have not been doing well. Disney Plus is still not making money, so that's adding into the overall picture for the company. And they go on to say here, to finish off the article, that they have angered fans as many of its most beloved attractions were showcases of pure creativity rather than characters. The Space Mountain, Big Thunder Mountain, and Matterhorn roller coasters weren't based on Disney stories, but became so successful that they are still standing decades after they opened. Characters have been added to the other rides from their era, causing a backlash from fans. Characters have been added to other rides from their era, causing a backlash from fans. If Disney wants to bring the magic back to its stock price, then it might have to do much more to appease them. I mean, that's a pretty scathing article from Forbes, and a lot of it I agree with. I mean, there's a lot of things. If you look just 10 years ago at all the things you got as part of a Walt Disney World vacation, you got Magical Express, you got Fast Pass Plus. You had little things like when you buy something in the shops, they would send it back to your hotel or hold it at the front gate for you. You know, it was much more affordable to go to the parks. And again, obviously inflation is up, but they talk in the article, inflation is up 30 some percent. Disney's most of their stuff is up 60 some, almost 70%. So, and given that the parks are responsible for basically most of the money that Disney makes, the fact that the stock price is taking a hit and they're saying the reason it's taking a hit is because of the parks, and the fact that you have much more competition in the park side from Universal. And not only Universal, there's a lot of competition just regionally speaking as well. You have parks like, we're from Missouri, Silver City has become a big park in the Midwest. You have like Dollywood. You have that new theme park that is being built by some ex-Imagineers out in Oklahoma. You just had Six Flags and Cedar Point merge together. You have Universal building a kids park in Texas, looking at going over to Britain as well. They have increased competition everywhere and not just Orlando. And with increased competition, that is great for the consumer. And I want more of that because I think that's what will get a better experience is more competition where you were forcing Universal and Disney and others to compete against each other. But the fact that there's weakness in the parks during increased competition, and we're less than a year away from Epic Universe opening, which is anticipated to be a giant boon for Universal, uh, I would just say that Disney stock price is not looking great, and it makes you wonder, what are they going to announce at D23? Because surely they understand this on some level and are looking to reassure stockholders and fans that they have things coming. But my biggest complaint, or one of, about Disney has been, and look at Communicore Hall over in Epcot and the entire Epcot project that they announced. What they announce and what they end up doing many times are two different things, and the amount of time it takes to do that. So not only are you not doing the things that you promised, you're making them take way longer. And I've said whatever they announce at D23 this year, we won't see for at least 3 to 5 years, if not longer. And that's dependent upon if they actually do what they said they were going to do. So we'll have to see what they do at D23. But again, I thought this was a very interesting article from Forbes, very much going after the Disney company, especially the parks division. I mean, you can take a look at it and read it yourself. It's a longer article, but they definitely go into detail about even taking shots at Diamaro and about how the parks are just not what they used to be, and really pointing out a lot of the pain points that people have been talking about online and other places for a long time. And really the funny thing is at D23, what have they do announce? I think the thing that probably would be the biggest boon to them at this point would be bringing back the things that they took away, bringing back Magical Express, bringing back free Fast Pass. I don't have any inclination that they're going to lower prices by any means. But if you brought those things back, I think the fan base and a lot of the Disney fans would be incredibly happy. And I think you would see an uptick in people coming in and just generally being more satisfied with Disney. It's the nickel and diming over the years. It's the charging for little things here and there that they never used to charge for, or just straight taking away, on top of the fact of not following through on promises and projects that they say they're going to do. So we'll have to see what they do at D23 and what they do going forward, and while we watch that stock price with Epic Universe opening in the near future as well. But that is going to do it for this video. If you like this video, please like this video. Subscribe to the channel as we talk about Universal Studios, Epic Universe, Disney World, and pop culture news around here all the time. And let us know in the comments, what do you think about this? Do you think this article was fair? Do you think it was a little too hard? Or do you think it was too soft in what they said? So let us know. And until next time, we will see you in the parks.